Let's bring in Dennis Lockhart. He's a former president of the Federal Reserve Bank of Atlanta, getting his take on the 75 basis point hike that we just got from the Fed. And Dennis, I want to start here because the Fed is laying out this possible rationale for a slowdown in the pace of rate hikes, saying that in determining the pace of future increases in the target range, a committee is going to take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation. I know you were specifically watching the language here, the change that we could potentially hear from the Fed. What's your takeaway on that statement?
Well, I'm not surprised at today's rate move. I think that was everybody expected that. I am a little surprised at the inclusion in the statement of language that gives some hint of what the path of policy might be. That's a little bit unusual. I think it's welcome because they're acknowledging that they're getting close to a restrictive point, and at some stage we'll be looking a lot more tactically at whether to add further rate rises or to pause. They're signaling that they're getting into that zone, and I think that's a good thing. And of course, they want to keep their options open as much as possible.
So, Dennis, based on that and other evidence you're taking into account, do you expect 50 next month and then a pause in 23 or keep hiking?
Depends on the data, of course, and we can't forget that. They're always going to be looking at the data and looking for some signs of progress against the inflation problem. I think it's quite plausible that they step down to 50 next month. I even say that's likely. Then they have a meeting January 31st and February 1st and another meeting in March. I think it's a little early to project those rate hikes if they actually occur, because it's going to depend on all the inflation reports and analysis they do between now and then.
And Dennis, they did say they would take into account the cumulative tightening, as well as some of the lags that people were concerned about in the real economy showing up. The Fed says that they're keeping that in mind. And this was a unanimous decision. Are you surprised? Because we were hearing a little bit of dissent as to how fast the Fed should be going right now.
Well, let's remember that the list of voters is a subset of the total committee. And so a unanimous decision on the 75 basis point increase doesn't necessarily reflect that there isn't a fairly robust debate during the meeting among those who think we should slow down and those who think they should keep at it and perhaps raise 75 next meeting or even thereafter. So you just don't know what the discussion is. The minutes that come out in 3 weeks will give us a much better sense of that. But I'm not surprised that it was a unanimous. I don't think anyone had a basis on which to dissent at this meeting.
Dennis, two questions here. I guess you've been in this room before, and I know we've asked you this in the past, but at this point in the economic cycle, when there's so much uncertainty, when we do have 5 inflation prints between now and the next Fed decision, what kind of conversations do you think are going on inside the Fed? And when you take a look at inflation right now, signs that it could potentially be cooling, how confident are you that we will see significant cooling here in the coming months?
Boy, I tell you, I have been surprised at how persistent the inflation picture has been so far. I think it's very hard to conclude that inflation in any way is really broken out to the downside. It is still a very troublesome picture when you take all of the different components into effect or into consideration. Your earlier speaker correctly said autos seem to be softening. Perhaps shelter and housing is softening, but it's still a little bit early to draw that conclusion. I think they will be talking among themselves about messaging, and that is if they decide to step down, how do they frame that decision exactly? And it's a little bit of a tricky communication problem, I think, for Jay Powell and for his colleagues.
Earlier this week, sir, BlackRock was out with a note saying we think the Fed will only stop when the severe damage from rate hikes is clear. Do you fear severe damage? And if so, where would we see it?
I've been saying now for many weeks that the more persistent inflation is, the greater the chances or probability of a recession, simply because they have one crude tool that they're using. It doesn't address every root cause of inflation. And if inflation continues, they're going to be highly tempted to continue to use that tool. So the risk of overshooting or oversteering is very definitely there. And I just think that you have to consider the possibility of a recession of some severity. I'm not sure what severity in 2023.
And we know that Chair Powell had talked about pain for the U.S. consumer, for the everyday American with this. For people who are wondering what this means for their credit card bills, how should they be bracing themselves for this period?
I spoke yesterday to someone from the retail industry who gave me a sense that the consumer is already adjusting to some extent, and that most of the spending in this particular chain of stores is on essentials, not on discretionary items. And I think that's probably what's happening. The overall consumer numbers are holding up, but the constitution of consumption is shifting to essentials. And I think you're going to see particularly those at the lower end of the income spectrum doing that more and more, and with more and more difficulty, frankly, if essentials continue to rise in price.
And just real quick, I guess just your reaction to the market's reaction to this. And I know you're more of an economy guy, not so much an equity person, but when you take a look at the euphoria that we continue to see in the markets, when the Fed is still saying that they're going to raise rates, it just might not be as aggressive. Do you think a move like this is justified?
Now, we'll see if it holds for the next couple of market sessions, but I think what you're seeing right now, and the Dow is up, 202 points, is sort of a sigh of relief mini rally after a lot of suspense building up, or not so much suspense, but let's say just building up to the decision and the announcement by the Fed. And I think what the Fed has done today, as well as has said, sort of confirms the expectations that were already priced into the market, and the market is responding positively to having their expectations affirmed.
The markets are walking through a desert searching for any hope that there might be water on the horizon, aren't they? Dennis Lockhart, great to have you here, sir. Appreciate that.